Hi traders and welcome to the Technical Analysis Market Watch on Friday the 16th of August. So I've seen a big rebound this week in a lot of the key markets and indices. We've seen really good results on the S&P 500 and the currencies have certainly hit some key zones. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and we can see that we've had a bit of a mixed week, really, because the range that we've actually seen this week has actually topped the high and the low in just the previous session. We can see here that we started the week out relatively strong. We saw a couple of really good moves, and then the last 2 days have really been a little bit volatile, actually, and this last period in particular has seen quite a decent range inside of the body. So really, and it's encompassed the whole week's trading. Really, it hasn't exactly finished. It's finished stronger for the day, for the session, but it is kind of in the middle of the entire range. So the problem with that, of course, is that we've got very strong resistance right where we are right now, around that sort of 66.20 mark. That's a really strong zone for it. We can see there's a lot of support right through here and a lot of resistance through this area here. It's actually one of the most important levels that we've seen on the Aussie USD, like in recent time, because it's probably got the most touches. If you go through it, you'll see the majority of the days that we've actually seen over the last recent period has actually touched this zone, and it's no different actually closing here. So what we do from here is a little bit confusing in the sense of picking a direction right now, but what the best course of action generally is in these situations is waiting for it to either break of either side of this candle. You can see that this range of the week has been relatively wide. We've got a low here of about 65 cents or 65.5 cents, and we've got a high of nearly 66.5 cents. So we've got a 100-point range that we've been playing around with. If you want to just trade it from a standpoint of scalping, you can scalp inside that zone and look for small changes of trend inside those levels. But when we get a daily close above 66.50 or a daily close below 65.50, then we can aim to the next level. So then we're looking at a 65 cent or a 66.80. So really scalp inside the range of this candle here until we get a daily break on either side, and then we move to the next level. So it's pretty straightforward once it gets moving, but right now we need some sort of movement, and we need a smaller time frame, like a 15-minute, to give us some guidance and see a higher high, higher low sequence, or a lower high, lower low, and we know where to aim for on that one. Okay, over to the US dollar CAD, and it's had a pretty subdued week in the sense that, look, it was obviously selling off last week, and the last couple of days have picked up and is trying to get above that very key zone of 137. It's slightly above 137 now, but 137 sort of 30 is the area that I would like to see broken. It's doing all the right things in terms of trying to get above it, but there is a 20 moving average right there. So right in front of it at around that 137.50, that's the one that needs to be broken before we start getting excited about going a little bit long. If we get a daily close above that 137.50 and above that moving average, more importantly, then we're going to start looking at a bigger move up to around that 138.50, which will be the next target. If of course it rolls over here and starts to push down and we get a close below 136 sort of 80, which is this area here, then we're going to look at the next big move down to around 136. So I think we've got reasonable trading on this one, but it's similar to the Aussie in a sense. It's at a very key zone where there's a lot of price action holding it up, and we really need a break on either side. So it's a bit of a watch and see on the US dollar CAD right now. The US dollar yen is another one that's obviously had a big move this week. Look, it consolidated a lot. Even at the start of the week, it was consolidating, and late last week, but we've seen a good breakout now. The 20 moving average was going to be the target that I was looking for basically for the last few days, because when we see consolidation like this, we're looking for a bit of a breakout to see it move in a relatively quick direction, and it did that. I would think that ideally, in a perfect world, this level here around that sort of 150.5 to 150.80 is probably the target, which is slightly above the moving average now because it hasn't done it quick enough. This consolidation has actually brought the moving average down a little bit lower than we would probably like for that support. But The yen is one of those ones that generally shoots through key zones anyway. It's exaggerated moves most of the time. So even if it does push up, I wouldn't be surprised to see it test those levels. That's going to be the real key, I think. Really where we're at now of the big drop, we're about probably a 38 point, the 38 fib, I'd say, would be a reasonable expectation. I'm pretty sure we'd be pretty close to that. Let's have a look. We'll quickly pop it on just for... let's have a look. So it's right on the 38.2 at the moment, as you can see. But I can see it probably pushing somewhere between the 38.2 and the 50, which is where a real key zone is. So reasonable expectation that we might see a little bit more movement up here. Beware the 20 moving average though. It's not very far away, and we might see in about 50 or 60 points, we might see a little bit of a problem in that as a resistance, but the yen has been known to sort of push through these levels very, very quickly, especially after a really, really big sell-off. So I would probably be expecting it somewhere in this area here before we find proper resistance. If it does indeed roll over earlier than that, the previous highs closes at around that 147.20 area is the area I'd be looking for on the short. I wouldn't be looking for much shorter than that until it really breaks down, and it may not do that. So yeah, look for expectations up to around that sort of 150.50, and if it rolls over here, down back to around that sort of 147.20 area. All right, over to the dollar index. We've seen a bit of a resurgence over the last session. It's at the last line of defense. Look, I don't think there's any secrets there. Every time it's touched this level at around that sort of 102.50 area, it's bounced off quite aggressively. As you can see, it did there. It did here, and it's tried again here. It's the last line of defense. If we get a close below 102, I think the dollar index is in awful trouble, and we're going to be looking back down, close to the parity levels after that the 150 level. But it's holding strong at the moment. It's given us a morning star pattern as well, a very strong morning star pattern at that. And if that's anything to go by, we could see a potential move back up to 103.70 probably as the target, because that would play the pattern out. 20 moving averages there, and it could cause some problems, but I think in the interim, it could get up there relatively quickly. Of course, the euro is the one we're looking at trading to make the inverse play. It hit the 110.50, all but got there. The 110 was the easy target, obviously. That's the one we were aiming for. It tried to break it, and it pulled down very, very quickly, okay? So that's something to take note of, because it looked like it was going to break through and keep going, but the daily candle closed it down, and it barely finished above it at all, really. So just above 110, which is not really a convincing close. With the dollar index looking how it's looking, I think that there's probably more weakness in the euro short term. It may not be a lot, because the dollar index hasn't got a lot to sort of bounce up from, but we could see it back down at the lows of around sort of 109.50 in the first instance, which is only 25 pips away from where it is now. But there is quite strong support here. You can see it right through that level there. And here, there is strong support around this level. But the 20 moving average is probably what I'm aiming for, really, which is around that sort of 109.20 to 40 area. If it happens in the next few days, the moving average won't go much higher than that. So this is the area that we're looking at for that pullback. If, of course, it reverses around and the dollar index starts to sell off again, the 110 break is the one we're looking for. So in that instance, we'd be looking for probably the previous high around that 110.50 area, and if we get a daily close above there, then I think it's off and running, and we're looking back up at around that 111 as a target. So very important zone for it. If it continues to sell off, the 20 moving average will be my target, and if it doesn't and starts to push up, the 110.50 will be the go. So we're really just waiting to see which way it starts to trend on the smaller time frames. And the S&P 500, the big moves of the week, really, it's been a really, really big move. The whole week has been, especially the last 3 days, been very, very solid. Retail sales weren't as bad as expected. The risk of recession has seemed to have subsided a little bit over the last couple of sessions. So the data indicates that we're pushed up to another high here of around a sort of 55.50 is another level, but the strength that is starting to show, in my mind, is a pretty easy trade for next week. If we're trading above 55.50, we'd be looking for all-time highs back up to around that sort of 56.70 to 5700 level. That's if we're trading there next week. If the week can't finish up above 50.50, I would be looking for pullbacks down to around that 54.50. It's pretty straightforward. I'd be pulling the pullbacks down. It really is where the week finishes, I think. For me, I'd be looking again 55.50 close for the week, and then next week I think we'd be looking at 5,700 as a target, but a close below this level, and I would be looking for a reversal back down to around that 54.50 because it does make sense. It's a very strong zone, and realistically, it has been a very, very big week. So it may actually pull back a little bit to make up for that aggression. The 20 moving average will be there to catch it at the 54.50 if it does pull back for Monday. So I think that would be a reasonable trade. And at that point, we'll reassess which direction the smaller time frames are going. So I hope you had a great week's trading. It's been a really, really good trading week for moves and hitting levels. Hopefully you're able to take advantage of some of those. We'll see what the new week gives us and see if we can establish a trend in a reasonable direction. Thanks very much, and I'll see you all next week.